Well, howdy there, Internet people. It's Belle again. So today, we're going to talk about the dollar, you, and Trump. Some economic news came out, and we're going to mainly talk about why it's happening and how it impacts you. A lot of you didn't miss the headlines about the dollar, and the questions started pouring in. The headlines vary a lot depending on which particular factoid they want to focus on. The dollar had its worst start, meaning the first 6 months of a year, in more than half a century. The dollar index, which tracks the U.S. dollar against other currencies, dropped 10% in 2025. That's the largest annual fall in decades. Trump's first half has seen the largest decline in the dollar of any half, first or last, in 30-something years. It doesn't matter which fact they're leading with. It's all bad news. But how does the dollar's relative value affect the average person? And why is this happening? I know there's a few people watching that do high-end finance stuff, but this video isn't really for you. First, you already know what this means. Second, if you're making moves big enough for this to really matter, you're not going to be rolling change for gas anytime soon. So it's a lower priority to cover from that side of things. Analysts at UniCredit probably put it best. Quote, "The U.S. dollar is the most notable loser so far this year, as it has lost 10% against other currencies, with investor concerns regarding Trump's policies having weighed on the greenback. On the other hand, the euro has risen by 5%. You have Trump's uncertainty. Markets hate uncertainty. You have a bunch of fiscal concerns made worse by Trump adding trillions in new debt. There are concerns about the Federal Reserve's independence. Then there are nagging worries and signs of stagflation. This is what's dragging the dollar down. Yes, you could sum it up with one single word: Trump. Then there are fundamental rational reasons for a slight decline, like the fact that Trump's 10-year budget window does almost all of the real spending in the first 40 months or so. Before you try to make an argument saying this is normal and rational, go look at the Buffett indicator sitting well above 200% and tell me that investors are behaving rationally right now. They're running on emotion. Okay, so that's the state of things. What does it mean for you? When the dollar is weaker, countries overseas might want more dollars for the same product. An item that cost $10 a year ago might cost $11 or $12 now, which, if it gets hit with a 50% tariff, the item that cost you $10 last year will cost you $17 or $18 now. Obviously, that's bad. If you're an American living overseas on a pension, it's bad. If you're planning on leaving the U.S. or vacationing abroad, it's bad. Now, normally, a weaker dollar has some silver linings. Our products are cheaper in comparison, so we might export more, which might even create some jobs due to increased demand. Given the state of global trade and international boycotts against U.S. products, that seems unlikely, but it's possible. The other silver lining is that tourists coming into the U.S. might spend more, but given the state of tourism, well, you get the picture. For the average person, it means the cost of imported goods go up. That's your big one. I know people are going to ask about the U.S. losing its safe haven status. I don't think we're quite there yet, but check back in a couple years. Anyway, it's just a thought. Y'all have a good day.